Welcome to the Daily Insights That Matter. Now, the topic of recession has been dominating the market commentary for quite some time now. In the second quarter, the US economy shrank by 0.6%. This was the second straight quarter of negative GDP growth that was seen in the US. However, by shrugging off rampant inflation and rising interest rates, the US economy grew at an unexpectedly strong annual pace of 3.2% for its third quarter from July through September. Now, this was better than an earlier estimate of 2.9% growth, which was expected in the third quarter. Now, a larger rise in consumer spending, mostly on services such as travel and recreation, accounted for the stronger GDP print in the third quarter. The largest contribution to growth in the third quarter, however, came from a steep drop in the trade deficit, as only smaller deficits were added to the GDP. Now, other segments of the economy were notably weaker. Residential investment was especially hard hit as higher mortgage rates took a toll. Now, the most recent revision depicts that the US economy is growing steadily, albeit at a slower rate than last year. But it doesn't anywhere mean that US is on the brink of a recession yet. Now, as the year comes to a close, the economy is still expanding. However, 2023 is expected to be a little more difficult. India, which has already been in talks with Russia for a rupee ruble payment system, is now looking at expanding the rupee trade with other nations as well, including several countries in Africa, UAE, Saudi Arabia, and Bangladesh, amongst others. Now, additionally, Sri Lanka is also likely to start using the Indian currency for bilateral trade. As more and more countries are looking to set up alternate supply chains in India, there is an openness to accepting the rupee trade. Now, the RBI has introduced a new mechanism in July for international trade settlements in the Indian currency. Now, with our trade deficit being at all-time highs on a monthly basis in the past, this proposed mechanism is aimed to stabilize the Indian rupee and also reduce the trade deficit. Now, given the situation with rapid geopolitical shifts, India has already started taking appropriate steps to make the rupee more acceptable internationally. Expanded trading in rupees will help India to reduce dependence on its foreign exchange reserves, and it will even help in boosting the balance of payments position and strengthening the fundamentals of the economy. Now, the exercise will also strengthen the rupee and internationalize it while reducing the impact of the exchange rate fluctuations on the economy. Meanwhile, China has also started putting in measures to internationalize its currency, the Chinese renminbi. So what does all of this news mean for you? The US economy is at a risk from both monetary policy tightening and global economic challenges. However, several sectors of the US economy have continued to grow and the labor market is still robust. This will therefore have an indirect neutral impact on you for time being. The expansion of rupee trade across multiple economies and the general openness to accepting the rupee trade is a positive for the INR. While the government is working towards bridging the initial procedural gaps, the discussions with multiple economies to carry out rupee trades would help in improving our fundamentals. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.